Hey everyone, welcome back to Broward-MIAMI, a leading real estate podcast in Broward County. Now this episode is a conversation with Miami Realtors Chief of Residential and Advocacy, Danielle Blake. 2025 Broward-MIAMI President Larry Singh, Miami Director of Broward Outreach, Jalina Pittman, and Danielle talk about the state of the condo market in the wake of new state condo regulations requiring inspections of older condominium buildings and adequate reserves for repairs. Danielle led a sold-out Condo Summit and is spearheading a Miami condo task force that is looking to provide even more support and advocacy for condo owners and associations. Did you know Florida is the only state in the U.S. that requires a client to put down 25% for a limited financing review if the condo building doesn't have enough in reserves? The requirement for every other state? 10%. Why is Florida the only state that is being geotargeted? Don't miss this episode, whether you're driving, walking, running, at the gym, cooking, whatever you're up to. Thank you for the time, and thank you for listening to the official Broward-MIAMI podcast.
Good morning, good afternoon, or good evening. Welcome to your Broward-MIAMI Insider, where we take an inside look at all things South Florida real estate. Today, we are talking about transparency in the condo market. We're joined here with your Miami Realtors Chief of Residential and Advocacy, Danielle Blake. And as always, we have your amazing host, Larry Singh, your 2025 Broward-MIAMI President. Larry, let's talk condos.
Yeah, I think this is, Jalina, this was probably one of the most important topics that we're facing right now in South Florida. So when we had this conversation about putting this podcast together, I said, let's just go straight to the top. Let's just get the expert on this in South Florida condominium. So Danielle Blake, welcome to the show.
Thank you very much. I appreciate having me here today. I'm excited to talk about my favorite topic, condos.
So I know this was a really big issue for you and the association starting out from the beginning of the year. Give us a little bit of a recap of what you've done so far, starting with our Condo Summit that we had in February.
All right. I'm going to go a little bit further back and tell you how I got into condos to begin with. So it was 2014, going way back in time here. And our chairman of the board was Lisa Mendez. And Lisa Mendez called me and she said, I have an FHA-approved buyer and I cannot find an FHA-approved condo. And they were looking in Hialeah specifically. And I thought, can't be possible. So I looked myself, and sure enough, it was true. There are no condos that were FHA approved in Hialeah. In fact, the nearest one was in Kendall. And so we started looking at why. Why was this the case? We put a task force together with NAREP and had different professions represented. And we narrowed it down to two primary reasons. One was insurance. Back then, they did not allow for pooled insurance, and Citizens, which insures most of our condominiums throughout Florida, is a statewide pooled insurance program. And the second one was reserves, and reserves have continued to be an issue through the years. And so Fannie, Freddie, FHA, they all want to see a minimum of 10% going into a reserve account. So that's kind of how I got started in the condo world. And then this year, what we did, we put a Condo Summit together, sold out. It was a fantastic event. And we kind of put all of those different topics. So we brought the reserve conversation into it, insurance conversation into it, first-time home buyers. We looked at all different segments and put a full day of programming together. It was a wonderful event.
So why do you think that really needed to be tackled? Not just for the FHA side of it, right? But what do you think where do you think this is going, and where do you see that trend going with the condos? And why did you think that was so important that we had to put together a full day summit?
Well, I think that it was important to put it together because you pick up little bits of information as you talk about these things. And so, if the condo questionnaire is not being completed by the association, for example, which is one of our topics, there are other people who shared tactics on ways that they were able to overcome that obstacle and get that condo questionnaire completed, or at least completed at a level that their servicer felt comfortable with when they were issuing it. So sharing that knowledge became very important, and that's really why we wanted to put that Condo Summit together, because we've learned a lot through the years.
For sure. And before we go even deeper, let's take a quick step back for anybody who may be new to the condo market in general. So you mentioned of FHA approval for condos. What is the difference in that for, what makes it so different for condos versus single family or other type of FHA loans?
So each lender, whenever they are going to service that loan on behalf of that secondary market, Fannie, Freddie, or FHA. FHA, Federal Housing Administration, it's under HUD. And so there's for that particular loan, there's two different ways to get approved. One is HUD, like I mentioned, and the other one, HRAP is what they call it, HUD Review Approval Process, and the other one is DELRAP. And so it's direct lender approved.
I love these acronyms.
There's so many of them.
So a Bank of America, for example, could go in and they could do the underwriting for that condo itself. There were a number of years, and I still don't know, I've heard different things about whether DELRAP is permitted in Florida or not, but for many years, the only way to get it approved was HUD had to approve that condo themselves.
Okay.
And each time that they're looking at, in HUD's case, insuring the loan product, they're looking at what standards do I want to see for that condominium. Those standards for condos are different than single-family homes because condos, you have common area and you share the responsibility in taking care of those common areas versus a single-family home. If the roof needs to be replaced, the owner needs to go and replace the roof. If the roof needs to be replaced on a condo, everybody has to chip in, and it's much more difficult to collect that money.
It's a shared expense versus an individual expense that you're looking at on a single-family home. But let's build off of what Jalina was asking on this, because I know you were talking about the requirements and all the stuff that's needed to purchase a condo, and with the condo questionnaires that are now becoming more and more difficult to get completed, right? That we're starting to see. And being in a room with a bunch of other real estate professionals to show each other how they've been overcoming these obstacles, I think was very important. And one of the main things that I've taken out of the Condo Summit when I went there, because one of our other leaders, Wesley, she really did a great job of utilizing the tools that we have available to us to overcome some of these obstacles. But as we're talking about these requirements, I wanted you to touch on a little bit about where we in the state of Florida requirements are compared to nationally when we're looking at condos and financing of these condos.
Reserves, specifically is where you're
going
with this. So, I mean, everybody knows it was June of 2021 when the building collapsed in Surfside, a partial collapse in Surfside, and so the laws have changed since then. And I think the state took a very unique approach because they're looking at, they didn't come in and say you have to fund everything. They took out the structural components because, to be honest, what do we care if you didn't properly maintain your tennis courts, right? Like we're looking at safety, soundness of the building. And so the safety and soundness of that structure, what do we have to look at? And maybe it's the windows, or they came up with these different elements that they have. Now they're statutory elements, and you have to set aside the reserves for that. So like I mentioned, Fannie, Freddie, and FHA, they want to see a minimum of 10% going into a reserve account. Okay. But there is no magic number in Florida. It's whatever your SIRS, your Structural Integrity Reserve Study, comes back with. That determines how much you need to set aside in the reserve account. And having said that, that number varies, but probably is going to be more than 10% for many of them. And so that means that a lot of those buildings should be able to meet that requirement of a minimum of 10% moving forward on that particular one. There's other factors like insurance or other stuff. So
it's funny because it's in the title. It's a reserve study, right? And people don't always understand that, right? Because they hear SIRS. And like you said, there's a whole bunch of acronyms that, especially in the condo sector, there's a lot of acronyms that are being thrown around. And so when we talk about the SIRS, which is a reserve study, it's to show how much that building actually needs to keep in reserves to be functional. And for so many years, Surfside, unfortunately, that tragic accident really did bring to light what was happening and that hole that we had in that condo market. But because we've now identified that hole, it's how we're making the changes to ensure that that never happens again. And although this is a painful process for us right now, it's something that I do think that really did need to be done. But I don't know about how we're going about it because we're trying to find our way in the dark, essentially. Would you agree?
I would. And that's why every year the legislature has had now what just passed, HB 913, we call it Condo 4.0 because it's their fourth attempt at getting it right. And what is right? I mean, right is you make changes as the market changes. So you'll propose something, see how it plays out, and go and make adjustments, move forward because you want to get it right. But you're not going to do that the first time.
And we're gonna dive deeper into the 4.0, but for everybody that doesn't know how we even got to 4.0, right? Because there was other iterations of that going first, right? So let's start off with a little bit of background of where we want us to go and where we started from. Because I think the journey that we've gotten us to this point kind of tells the tale of how we're trying to brighten the path for us.
How far back you want to go?
Let's go to the beginning. Let's go. I know from the point of Hollandale.
Okay.
So if you want to start before that, that would inform me as well. So I'm being honest with you.
Right. So Hollandale, I'm trying to remember the year it was, but it was definitely before 2021. And there has always been a need for transparency of condo docs. And so we'll talk about the governing docs for a moment. So you're looking at the bylaws of the association, the governing, what do you call it? The developer.
When they do it, the condo docs?
Oh, the restrictive covenants is one, but that is not the word I'm looking for. Anyway, there's 3 different components that make up the governing docs: rules and regulations. Declaration. There's the word. So the declaration is kind of the first document, the superior document, and then everything else follows after that. So, those are public record. Right. Anytime you can go in and you can find the declaration of a condo association. Finding it has always been difficult to do because it's not like you can go to the clerk of court and type in the property address. So it's been very difficult when buyers are looking to purchase a condo to get that information before they make their offer. That is truly the beginning of what we're talking about now. From the realtor position of proposing for more advocacy and accountability, that's what we were looking at. And we've pushed for that for years.
So let me just jump in right here because I think for our audience, I don't think people truly understand why that is so important. And I think that we need to shed a little bit of light. So those governing docs that govern how the actual condo runs, it also includes the rules and regulations. So if you're buying a condo, these are the rules that you as an owner have to abide by. So these are significant to any purchaser that's coming into this realm. Right. So without having the understanding of what you're agreeing to, that's a pretty big deal, right? So,
and that's the fundamental issue that you just touched on right there, is that at what point in the transaction should you get those documents?
Right.
And there are people who believe after you make your offer, that's when you're entitled to those documents, including, quite frankly, the statute, because that's how the statute reads. Right. It's a prospective purchaser. So they read that you have to be under contract before the seller is obligated to turn that information over to you. Now that you have the information and have to read through it, do you want to change your offer? Or should it be that you have that information up front before you submit your initial offer? Right. That's really been the fundamental question and to where we sit with some of these changes that have happened.
Well, I think that the whole purpose of it, while it was after it went under contract, was because they built in that rescission period. If you didn't like the rules and regulations and governing docs that were there, then you could say, okay, I want to cancel my offer because I don't agree to these terms.
Is 3 days enough to read through all those documents?
That's the question,
then,
right?
Does it restart when you get a new document? Does it keep adding up as you find out more information? So,
that's something that we talked about at the Condo Summit is when does the clock really start? Exactly. And a lot of people don't understand. There are certain requirements that you are, as the seller, you must turn over at your expense to the buyer. And that clock, whether it's 3 days, 7 days, 15 days, there are different provisions depending on where we are in time and what type of condo it is. But that clock does not start until the seller has turned over each of those items.
That's good information. Because on Condo 4.0, they have different sections, or there's a section for the buyers to check which ones they want. So if it takes a while for them to receive that document, that's good for them to hear, oh, I don't have everything, so now I have 7 days, 21 days.
Right.
But on the other end, on the listing side, I can imagine that slows the process down a bit for them.
So yes, and that's what we've done with our education. How do we teach the seller's rep how to get that information in a time a timely manner.
Right.
And so there are some password protected websites that each of the owner has the ability to get a password from the management company or from the association and log into their password protected web. I guarantee you most sellers don't even know that. And that, by the way, I should clarify, that's for condos that have 150 units or more. And so that's not all of the condos out there. Starting January 1st, that's going to change to 25 units or more. That's going to be 92% of the condos that are out there in Florida.
January 1st?
Yes. January 1st. All condos that are 25 units or more are required to have a password-protected website. This law passed in 2019, but the provision is kicking in next year, January 1st of 2026. You've had plenty of time to get your website up and running now. It was initially for the 150, and it drops down to 25 starting January 1st. So the documents that are going to be on the governing docs that we just talked about. So instead of having to go to the clerk of court office and look for it as a prospective purchaser, yes, I can ask the seller for it. But in Miami-Dade County, I can also go to the Community Association Registry and download those documents and figure out, like, kind of factor those into my offer.
So let me ask you a question, because now I'm going to put my realtor hat on, right? 'Cause now I have questions, right? So as of January 1st, 25 units or more, they have to have a password-protected website where you're going to have those governing docs in that password-protected website. Prior to that, there used to be a charge for us to get those governing docs, right?
There's still a charge. Yeah.
That was the question.
There is still a charge. If you go to the management company, it's the association, but if they designate that to a management company, they can set up a reasonable time that you go there and set up a time that you go in person. You can bring a scanning device. I don't know if you have one on you now, Larry, but a scanning device, and you can scan those documents for free. But if you don't have that scanning device, then you pay a reasonable fee.
Okay. I have a question related to that, because I know Miami Realtors, we have a condo registry database available on the dashboard. Is that related to that same platform? Is that something different? Are we elevating that? How can our members access those registrations through that database on Miami Realtors?
So that database is the Miami-Dade County database that I'm referring to.
So they don't have to search all over the world for it. Just go straight to your dashboard.
As a matter of fact, I had a lady that came up to our booth last week while we were at Rock the Market.
Right.
And we were talking about, do you do commercial? Do you residential? You do condos? Yes, I do condos. And so I showed her where to find it. And
I was actually there for that.
She said, God sent me to your table. We were just last week in our office looking for that link. So it was perfect.
Good.
It's so the Miami-Dade registry, because I want to get into that a little bit more, right? But that stemmed from Hollandale?
So Hollandale was the first city to pass it.
Okay.
And Hollandale still does have theirs. After the building collapsed, actually, to be fair, it was already in bill drafting in Miami-Dade County when the building collapsed. After the building collapsed, it was very apparent that the residents who lived there did not know what was truly happening in that building. And they didn't know because, yes, they have access. They did. That building was 138, if I recall, so not 150 or more. So they weren't required to have the password-protected website. But, they are entitled to the documents, so they could go to their office and pay a reasonable fee and access this information as well. So, but nobody was doing that. And so how could we make it more transparent? Putting it on the website once a year, February 1st, is in Miami-Dade County is when they have to do it. Hollandale is a very similar program, but they have to turn those documents over to the city or to the county, and they become public record. So anyone can go and look at this.
I think that has been one of the most transformative things for the condo market in Miami-Dade County right now, because it has helped the realtors so much, unlock so much inventory that you may not have even known that was there. And I steal this from you all the time. And I told you earlier today, you said this to me probably a year and a half, almost 2 years ago.
It's stuck.
And it's stuck because South Florida is not like other parts of the state, whereas other parts of the states will look at condos as secondary
luxury. Yeah.
Right. They're second homes, they're beachfront properties. In South Florida, condos for us are our entry level. That's our entry level starter places for young families to start out, right? Young people, they buy their first home. It's typically a condo. That's usually what you'll start to see happen because the price point is there.
Mm-hmm. Correct.
Now, with it not being financeable, you kind of locking out those entry-level buyers to going into the marketplace. Mm-hmm. And if we follow the premise that wealth building starts with home ownership, it becomes so much more difficult to build wealth because you can't get into that entry point. Let's be honest, over the last couple of years, South Florida has seen a high demand, which has driven up prices, which is great for our real estate market. But the people that help drive that real estate market are the people that are at the entry level.
Right.
And I explain this to my kids all the time. My son, I said, if you bought a house for $100,000 and you lived there for 5 years and you sold it for $100,000, right? Mm-hmm. You broke even, taking all the other stuff out of it. Right. How much did you pay in rent?
Yeah.
Yeah.
You didn't pay anything in rent. You lived in a house for 5 years free.
Correct.
And you broke even. And he was like, that's mind blowing. So yeah, I mean, you need those starter homes to get people into, for sure. Right. And that's what it is for us in South Florida.
So let's follow the train on this, right? Let's follow and hit all the stops. So Hollandale passes theirs. At the same time, Miami-Dade was already in production of their Condo Transparency Act.
Mm-hmm. And I want to give credit to Annabelle Limatab, who's one of the commissioners there. And we were actually meeting with Spencer Hennings, who was the condo ombudsman at the time. And so we were pitching this idea of having one database under DBPR. And he said, you really should talk to Annabelle Limatab, who happens to be one of our members, because she's doing something like this in Hollandale, which then when we connected with her and explored it, and so she shared some stuff, we shared some stuff. She was on round 2 at the time that we discussed it. And then, came over here to Miami-Dade County and proposed it here. It really has been a game changer. And there are some changes. I know we're going to talk about Condo 4.0, but now the state is going to build something. We're waiting to see. There are some directives that they've received from the legislature. By October 1st, every condo association has to set up an account to be able to communicate with DBPR and submit those documents that they need. But those documents that they submit to the state are different than what we have at the county or in Hollandale Beach.
And that's regardless of the number of units and how long it's been established?
It's going to be all condos. All condos have to set that up by October 1st.
Which is great.
Yes.
That part of it is great. But which brings us to where we're going to go with this now, right? We've seen so much success in Miami-Dade County. Mm-hmm. We're actually even seeing a lot of success with Hollandale, right? So Miami-Dade and Hollandale, with Hollandale kind of leading the charge on that, has seen all this success. Why hasn't this been adopted statewide or countywide or citywide across the state?
Well, I'm not a lawmaker, but from what I hear, it's perceived to be a South Florida problem. Okay. And so they didn't want to do anything across the whole state because it's really just South Florida that's making the most noise about this. And that was kind of the success for how we were able to do it in Miami-Dade County, because we didn't get any, pushback from the state level. If we were to create this at the county level, would you guys not support, but, not cause trouble, maybe is the better way of saying it. And so they gave the green light for that, and that's how we were able to create the successes here. There just hasn't been an appetite until now. And so now with Condo 4.0, they are finally realizing that it's not just a South Florida problem, and that transparency really is a good thing, right, and that we need to put this information together. So hopefully, I don't know what we're going to see, and it circles back to Broward on this, because we actually had this on the agenda in Broward County several years ago. Can't remember the exact year now, but to create the same database in Broward County. And then the state, in one of their iterations of legislation, came out and said that now condo associations have to submit to self-report to the state how many, this is 3 stories and higher. So threshold is what they call it. But if they're 3 stories and higher, you have to report to DBPR saying that you're 3 stories and higher. Well, Broward looked at that and said, oh, DBPR is creating a website, or creating a database, so we don't need to do this at our level. And they're nothing alike, nothing. And in fact, DBPR has come back and said that their one-time bite at the apple for creating this database of 3 stories and higher was less than successful. And that's part of the reason why they came back and pushed for this new legislation that we saw in HB 913 to have another attempt at it, and not a one-time bite at the apple. Now, on an annual basis, you're going to see reporting come out of there.
Okay. Some great development for that.
So let me ask you a question. What's the difference between what's required at the state and then what's required at the county level for Miami-Dade County? Because from what I hear from my realtor colleagues is that the Miami-Dade County one really gives you all the information that you need.
It does. And this is where some major confusion is going to come in. Because what do you need? What does your prospective purchaser need?
Everything.
Yeah, that's a great answer. But governing docs number one, right? We want to make sure we get the governing docs. Miami-Dade County, Hollandale Beach, they have governing docs in their portals.
Budget.
The state will, hold on, I'll get to the budget in a minute. The state will not have governing docs in their database. So financials, for example.
So hold on, wait. So they're going to have So they're going to have the governing docs in their database.
No, Miami-Dade County has.
Okay, Miami-Dade County has it in their database.
DBPR is not going to have governing docs in their database.
So what are they going to have?
So I have a list here. They're mostly focused on the milestone inspection and the SIRS, right? And trying to figure out which one. So one of the things that has to be reported is the number of buildings, stories, and units. Based on the certificate of occupancy, they're mostly looking at the stuff that the local information that the stuff that they need for enforcement side for the SIRS and the milestone inspection.
Gotcha. Okay. So they're more looking at it from a 30,000 foot view, not on what do the purchasers need.
They are definitely not looking at it from what the purchasers need.
Gotcha.
For sure.
Because I think that's really, listen, I'm not discounting that the SIRS report and the structural integrity report, that I'm not discounting how important they are, right? But I don't want to conflate the importance of that versus the importance of giving the purchasers the tools that they need to purchase the property while being informed. So, and you guys see us looking at this sheet right here, and I'm going to tell you, this is the cheat sheet that Danielle has and her team has put together, and it's available on our Miami website, correct?
We have a website, miamirealtors.com/condos, and if it's not there, I will make sure it's there today.
Yeah.
So under the password protected section.
Yeah.
We have a password protected section for forms that we've created to help our members. And one of them in particular, I think that we get the most thank you for, or 2 of them actually that we get the most thank you for. There's a form with boxes that you can check. I think you were alluding to this. If a seller wants to request those documents from the management company or from the association if they're self-managed. And so they just fill out the top and check the boxes of which forms that they need. And then the second form is that they have 10 business days to get it over to the seller. And if they don't do it within 10 business days, it's what we call the pow-pow form. It's the one that in red writing says, you had 10 business days to get it to us and you haven't done that. I just want to remind you what the law is and the penalties that go along with that. So that's the second form that you can submit over them for failure to comply.
So let's take a step back, because I was saying that the SARS from a structural and a safety standpoint, the structural integrity report, the SARS, that's all important. And from a state level, I can understand why they're requesting that, right? From a local and a county level, right? We're always looking to essentially make sure that everybody has the opportunity to get into housing. So when we look at what Miami-Dade is requesting right now and what Hollandale is requesting right now, I know we have this sheet. Just as an overview, can you just point out a couple of the things that we would look at that's now required, that's there, that we're not going to have on the state side?
Yes. So the big ones, I did point out, the governing docs and the financial information. So the state level still is not going to be collecting those budgets, that kind of information. If you want to know how big, how many stories or how many units there are, that would be when you would go to the state site to figure that out, because you're not going to have that at the local site. So I think you are going to find people kind of toddling between the two of them. But look, the truth is the more information, the better. And so it doesn't matter if you're going to the state or you're going to local, you're digging for this information. To have them all in one place would be perfect. That would be a perfect world. But to have a place to go to get them, and Wesley touches on that too, and how to use IMAP to kind of reverse engineer and figure out which ones we're able to purchase with as little as 3% down or 5% down, as opposed to having to come up with 25% or some other variation of financing. Those are all ways that you can figure out how to back end this. But if they just gave you the answer up front, wouldn't it make life so much easier?
And we do have this struggle in Broward County. So I'm going to share with you a quick story about something that just happened this past week. So we had a condo under contract. Everything was moving along smoothly. The agent went to the HOA and they said, okay, I need a copy of the budget. I need any of the minutes that we're going to have for the last 3 meetings, right, to see if there's any special assessments that are going to be coming. I need a copy of your CERS and your inspection. I need all of it. Okay. She was like, okay, the HOA said, no problem. We're going to get you the budget. And she goes, okay, while we're waiting on you to get me the budget, can you tell me, are you fully funded on the reserves? They said yes. Okay. So based on what they told them, not only did they say it to them, she was like, okay, can you just break it down for me in an email? And this is what actually saved our client. Can you break it down in an email? Okay. And then she sent the link for her to fill out the payment for the HOA approval and for the condo questionnaire that the buyer has to pay for, right? Okay. Everything was then sent to her probably a week and a half later. Guess what they did not have? Reserves. Yes. They didn't have any reserves.
And that's the biggest, I'd say, challenge to lending, because if they don't have those reserves, I know we talked about earlier in the program, but if they don't have a minimum of 10% going to the reserve account, that same buyer, the reason why she's asking that question is because let's say that I'm the buyer and I've only saved up 5% because this is going to be my second condo I've purchased that I intend to move in, and so I can only get 95% LTV. If that building doesn't have a minimum of 10% going into that reserve account, I'm only going to get a 75% loan to value, LTV. So I've got to figure out where to come up with the rest of the money. And I don't have another 20% sitting in a bank account that I can pull from. That means she has to go and get a second mortgage. And that second mortgage is not always fixed. It's, adjustable, which is not good. And there's non-QM. So she'll pay a higher interest rate, yes, for that. So it really is important.
Yeah, so that goes back to your concern of why the state doesn't require certain things on their documents, because now you have to wait, pay for it, and possibly not have that information up front before you enter into that contract.
Well, I guess, excuse me, I guess it can be looked at as the transfer of property is really a local and a county issue versus a state issue, right? Although it does affect the state overall, but you're really talking about the transaction itself as a local and county issue. Right. So I can see why the state is not kind of getting involved in that, but that shouldn't stop the counties from moving it forward to actually have these things. Like we said earlier, for South Florida, this is a bigger issue than for the rest of the state. And from what I've been hearing, Tampa and Orlando is in the same boat as South Florida right now.
Yes.
Right? So you have your biggest municipalities that are now really having to look at this, because you have to be able to unlock this affordable housing for new home buyers.
And even Destin Fort Walton, which is over on the other side of the state, they're also, now that these requirements are in place, how do we get this information? And so accessing it, that transparency is really important.
So let's take a step forward, right? So we now talked about how Miami-Dade and Hallandale has seen success on this. We saw that the state is really looking at the structural and the safety aspect of it. So what's being done to now push this forward for Broward County, Palm Beach, Destin, Orlando, Tampa? What are we doing as an organization here? I already know the answer to this, but
Are you cheating?
but I'm cheating, right? I'm setting the stage. How are we doing this going forward? What are we looking at?
We, my other title, Chief of Residential and Advocacy, we have been advocating. And we already mentioned, we passed it in Miami-Dade County by working with our county commissioners. We would like to do the same in Broward County. There is another association there, Broward, Palm Beaches, and St. Lucie. We are partnered with them, and we are getting ready to start meeting with their county commissioners to hopefully push this through in Broward County based on the success in Miami-Dade County.
And I think that this is a good initiative going forward because of the fact that we've already seen the trial play out.
Yes.
And how successful it has been. And now with all the information that's required, I think that it benefits the counties and the local municipalities within that county to have something like this.
It does. And even in Miami-Dade County, we talked about this very early on with AI, with the tools that you have. Now the county has a mechanism to go in and look and see. They receive funding. They receive funding for unit owners to help them not only with down payment assistance, but with rehab. And so how could you go in and maybe some of these buildings that are in threat of having to remove the tenants from there for safety reasons, is there a way that you could go in and help them to kind of make these repairs so you can keep that affordable inventory there? So there's all kinds of benefits that you could look at. And there huge reasons why the county should want to do this.
So let me ask you this. How was it received in Dade County when we were presenting for that?
That's a great question because I'm wondering why would someone not want it? Why would the county not choose to have it transparent?
So in Miami-Dade County, prior to the building that collapsed, some of the initial pushback that we were getting was actually from staff. Okay. And they were saying that we're not allowed to do this. The state preempts us. And that was the reason why we went to DBPR and worked with the legal team and obviously worked with Florida Realtors, our partners in Tallahassee, to say, is there anything in law that would preempt a county from doing what we are proposing, including the budget information? Because that's probably been the biggest point of contention, is that a lot of the associations did not want to give up the budget information. And that would be the second people who are kind of fighting this is, they look at it from a business standpoint. And so should I have to turn over my financials if it were just any other business that are out there? That's how they view it. And I think, you shouldn't, but when you're getting ready to sell your business, don't you turn over those financials? Larry, that's for you.
You do because it's part of your due diligence process, right? And with any other transaction, you would have to now.
So then that question becomes, should it be public information? So that's where you go back to what happened in Surfside. And, the information was always there for unit owners. And by the way, there were 28 transactions in the year leading up to what happened. And so
at the Surfside building.
In Surfside. And so for those 28 families, would they have moved into that building, whether they were rentals or whether they were purchasing it, would they have moved into the building knowing everything that we know now? And that was really the talking point for Miami-Dade County, is that at what point in the transaction should you receive that information? Is it when you're excited because you finally found your dream unit and now they give you a stack of papers and you're expected to read through it? Or should it be while you're doing your due diligence before you make that offer? That was really the talking point, and it was timing. The timing in 2021, they really believed in transparency and holding people accountable.
Right. And the transparency adds to that first-time home buyer you mentioned earlier, that's that entryway into that generational wealth and building that property ownership. If they don't even know to ask for this information, the fact that this situation is here now, we're going through all the changes with the statutes, people are starting to realize, I need to ask more questions. I need to know how is the structure of this building. What's more than the fee of the HOA? What's included? Right. What is my money actually going to for those reserves?
And are there any pending special assessments that are coming down? So it's not just about today, it's about the future. What are we looking at? And that's the type of information that you need through transparency.
and I think you've heard this story already, but I'm going to tell it again. Over my career, I've done thousands of transactions. A couple of years ago, my wife and I, we looked back at the first house that we bought. We looked at, because we keep all the stuff that we have, right? So we have at that time, it was the HUD one, right? So, which is now the closing disclosure.
Yes.
We looked back at that. And you know what the one thing that we both said?
What?
God, we didn't know anything.
It's true.
And I can imagine you're not the only one who can have that memory.
Mind you, we're both in the real estate industry, but we were very new at the time.
It's true.
And now looking back at it 20 years later,
right?
You look at it and you're like, and this is coming from somebody that's in the industry.
Right.
And I had been in the industry for a few years at that point. Mm-hmm. So you imagine what somebody's going to go through that has never been in this industry. Mm-hmm. Let's say that they do something else completely outside of real estate overall. How are they expected to know this stuff? You don't know the questions that you need to ask if you've never asked them before.
Oh.
And explaining what a milestone inspection is. I think that's the part that's been very confusing because there's different terminology out there. Mm-hmm. And this is something that we're hoping to clear up this session. And I'll just give you a quick, this will be for Condo 5.0.
Condo 5.0.
Miami-Dade County has had the recertification. It's known as the 40-year recertification for condos since the 1970s. Broward later adopted it. All condominiums, regardless of your height, regardless of your 3 stories and higher, you have to go through this recertification. Then the state came in with this milestone inspection program. And I think this has been very confusing for our members when they get the condo rider from Florida Realtors on how to answer what was subsection 10 is now subsection 9. But how, is the property subject to a milestone inspection? Milestone inspection, by definition, is 3 stories and higher. If you're looking at a townhouse that's a condo and it's only 2 stories, now it's 3 and habitable. That was one of the things they clarified in this 4.0, the latest bill that passed. So let's say it's a townhouse and there's a garage on the first story. You go up and then your first unit is there and there's a second unit on what is technically the 3rd floor.
Still only 2 stories.
So that is now before they had to go through the milestone inspection. Mm-hmm. In fact, my mom just bought a condo in this exact situation. So before, I was telling her, and it was over the summer, so I'm like, before July 1st, yes. After July 1st, no. So, there are a lot of changes and confusions around this. Right. But she's in a different county. Let's say that we're in Broward County, for example. At that point, the definition changes. It's then a recertification as opposed to a milestone inspection. Well, what is the difference? So the difference is that password-protected website that we just discussed, they are required to have the milestone inspection because they were 3 stories and higher on that password-protected website. A recertification, which is a local milestone program, if you want to call it that, but a local recertification is not required to be on the password-protected website, but is required to be turned over under Johnson v. Davis, which is a material defect that is not visibly. So it gets very confusing. Mm-hmm. Bottom line is always disclose, but it's how you find this information. Are we going to make it easy or are we going to make it difficult? So if we could clarify that this session and loop in the recertifications, if a county has elected to do that like they've done with some of the other stuff, I think that'll help.
Isn't it also the time frame is different on the milestone versus
the
recertification?
That was the other stuff I was mentioning. So at the state level for a milestone, they allow local government to drop it. So the 30-year is the kind of the bar there, and they can drop it to lesser depending on factors. When it originally passed, the state said it was 3 miles from the coastline. Miami-Dade County adopted it. So anything still 3 miles in from the coastline has to do their initial at 25 years and every 10 years thereafter. That's the milestone inspection or recertification, depending on the height of your building.
So pause. Milestone, I know you were just clarifying that, but
it is
milestone
so confusing,
and recertification in that statement seem very similar if you're not a certain height. So they're basically the same.
They are. Okay. I'm gonna go through it again because it's very confusing.
Yeah.
So we're getting confused at the table right now.
I'm like, okay. She said maybe. So yes, go ahead.
Okay. In Miami-Dade and Broward County, there since the 1970s in Miami-Dade, I don't remember the year in Broward, but many years, I'll say over 20, there has been a recertification that at 40 years. So if your condo was 40 years And then at 50, 60, 70,
and that's
you
the
have to do
40-year certification.
That is the 40-year
that everybody talks about.
Then when the state came in and they passed the first condo 1.0, we'll call it that, when they passed the first one, then they said, we have this new standard, and it's 3 stories and higher. They were trying to help out the smaller condo units. Okay. So 3 stories and higher, you have to go through a milestone inspection. So what Miami-Dade and Broward later did was they came in and said, okay, instead of doing a 40-year recertification, we're going to drop it down to 30, but we're not going to call it a 30-year recertification. Well, no, milestone is the state program. Gotcha. It's still a recertification. This is where it gets very confusing. And it's confusing for everybody, especially for our members. Like, when is it a recertification? When is it milestone? When did these rules apply? And it is very confusing. We're hoping to fix some of that moving forward. But so let's see, where are we at? Okay, Miami-Dade County came in, but they're not calling it a 30-year recertification because remember, 3 miles from the coastline, it's 25, so you don't call it 30. So now it's just the recertification, and the recertification, if it's 3 stories and higher, then it's called a milestone recertification because you follow the state stuff. But really, if you're below 3 stories, it's still practically the milestone recertification, the milestone inspection, except it doesn't have to be on the password protect. That's really the biggest thing. And I say that because where do you go and get that information?
You have to request it.
You have to request it,
and
you have to
pay the fee.
And pay the fee.
I make a joke about that all the time, right? Because it's and that's why I brought it up with the password protected site, because they just have to generate a password for you, which is pretty much digital at this point once you fill out the forms, but you still have to pay the fee.
Not for the password. Okay. To get your password for this protected website, they have to give that to you. They can't charge you a fee for that. But all the documents that are behind that password protected website are free to print. But if you go to the association, yes, they can charge you a reasonable fee. That's why it's so important that for this recertification and all this confusion we're talking about, we would like they did for counties, they said, okay, you can drop it down. So in Broward County, instead of 30, it's 25 for everybody. They allowed locals to drop those years down based on, they gave a couple of factors you can base it on. So why can't they do the same for the 3 stories and below? So if you allowed counties or cities to drop it down to 0, which in effect is what Broward and Miami-Dade are, then it would be a requirement to have those milestones, all of them, whether they're recertification or not, everything would have to be on the password protected website.
So it kind of seems like everything is kind of building on top of each other, right? and I know this, we'll call it 5.0, because now we're going to get into the 4.0 stuff, right? And I know for 5.0, you want to see some of this stuff cleaned up a little bit and how it's going to look and just be a little bit more streamlined, which I think we can all agree really does need to happen. But let's take a step back to the 4.0 and how it sits right now and what we're talking about. Because it's HB 913, right? And then you have Miami-Dade, then you have Hollandale, which Hollandale and Miami-Dade are pretty similar in what their requirements are, but the HB 913 is very different in what their requirements are. So if this is we're now working with the other association to kind of to move this forward into Broward County to see, how do you think that this is going to affect the transparency in those condos? Because let's be honest, Broward, compared to Miami-Dade, has a lot more older condos than Miami-Dade County does. Because we see all the new condos going up in Miami, we're thinking that there's so many more, but they're not going to fall into that rule because they're brand new.
Well, no, I guess from that perspective, but they have a developer turnover report.
Correct.
That's now required, and it has some of the same components. So it's not like I'm younger than 25 years, so I don't have to do anything.
I mean, right.
No, still have stuff.
No. What I mean is the concern of a 50-year-old building and a 3-month-old building is not going to be the same concerns.
And you know what's interesting about that? We've kind of broken our studies now into 30 years and older versus younger than 30 years. And in our older, we received a question. I was on a panel and they asked, so could you explain about the newer inventory moving faster? And so I can't explain anything because we have to look it up. So I looked it up and it was actually the opposite. The older condominiums still, we go back and check on it periodically. Gay just checked for us this month. The older units are still moving faster than the younger units.
Affordability.
And that's what it comes back to. They're affordable.
That's really what it. Listen. So my oldest sister moved here from New York. She was pregnant with my niece, which is my oldest niece, and she was married. And the only thing that they could afford at the time, so that this is going to age all of us a little, right? Was a condo that she bought for $80,000.
Wow.
In Aventura, right?
Wow.
so
I'm over here like, what's
let's
the
just
HOA?
say it started with 19, okay? But the reality is that was her introduction into home ownership, was having that condo. And at that time, that was what was affordable. Move forward to 2025, those older condos that still may be in really good shape are selling for sub 500, right? You're sub 500,000 on those condos. Whereas to get into a house in Dade, Broward, or Palm Beach, you're going to be over 500,000.
Yeah.
To get into a house, you're over 500,000. To get into a townhouse, you're going to be 380 to 500. That's where you're going to be. So where do you go?
Condos.
But now if you can't finance the condos.
That's a real question. And, there's kind of a mixed bag out there as far as the history of what the condo did. Well, let's go back to reserve studies, for example. Reserve studies are not new. They've been around forever. They were just never required before. So the condo associations that did the reserve studies and set aside the reserves, they are in a much better position. And that's really the story that our members have been telling us. So even though the building is over 30 years old, if they did what they were supposed to and they're maintaining, those transactions are going through. There's no issue with them. It's when they didn't set aside reserves, they didn't do the maintenance on the property, and they feel like everything is coming at them at once. That's where you get these, there have been a few stories out there, especially through the media, where they want to sensationalize the stories. And no doubt, there are going to be some stories out there like that. But for the most part, I think our condos have been doing the same thing. The other thing that this legislation allows them to do, because there's been a question about what do we do now if they didn't set the money aside, now they're allowing to do loans and credit lines of credit. That's what I was trying to get out. So it gives more options to those unit owners. And so I think that's every little bit is going to help. And they need those options.
Well, I think it's not a one size fits all, right? Especially when we start looking at the diversity of use when you go all throughout the state. When we look at it from a major metropolitan, like I said earlier, right? The Tampa, Orlando, Miami, Fort Lauderdale, their use is different for that condo inventory than somewhere that doesn't have as many people. The density is not as high. But I think that when we kind of look at what's being proposed, I have a hard time, and maybe it's just me, but I'm having a hard time finding a flaw in getting this passed in Broward on a benefit, on a county benefit level. I understand it from the business perspective of it, and you're right. And I've been kind of going over this in my head, and I wouldn't like anybody to say you have to make your records public for my business.
Right.
But I think with Miami-Dade, because that is a password protected site, isn't it?
No, that one is open.
It's an open site.
It's an open site. And there were questions early on from our members about, do I have to submit an email and then wait a certain number of days for it to come back? No, you can go in there and you can log in at any time. Not log in. You can open up the website at any time and you can see those documents that are there. Same with Hollandale Beach.
So I think for me, I think it's an easy solution, right? The same way they protected their governing docs, they can still do that but have the same requirements that they have to put out.
Yeah, I think from what we've heard so far in Broward County, it's a resource issue from the county side. And so in Miami-Dade County, we have lots of unincorporated areas, and mostly in Broward County, it's incorporated. So and I do want to clarify that the one in Miami-Dade covers the entire county. So even if you're a condo in Miami Beach, you still have to submit your documents to the county so that it's one site. It has all the information in one location. Ideally, that's the way it would be in Broward County as well.
And I think that, again, it'll unlock a lot of that inventory. Jalina, one of the topics that we talk about all the time is you're going into home ownership soon. So you're learning a lot of this as we go through it. How do you feel about having more choices?
Choices are always a great option.
Right? Because that's what it comes down to.
That's what makes it better to decide, because you can know everything that's out there for you, not just stuck or pigeonholed in one area. And sadly, with the way the media coverage is about condos, people are fearing buying condos at this point. It's, stay away from this or avoid that, without knowing truly how beneficial it is for you when we are seeing, we're just requiring more safety for the buyers. That's what it comes on this side. That's what I'm hearing. It's safer for the buyers. Financial part we'll talk about later. But as far as requiring the search, requiring the milestone inspection, is a safety precaution for those buyers.
Well, and for the residents too. I mean, they are the ones currently living there. Yes.
But a condo is just like any other asset, right? That you have. The better you maintain it, the longer it's going to last, right? That goes true with anything. Yes. If I have a watch and I don't service it and I don't do anything and I just kind of bang it around, it's not going to last as long as if I had a watch and I regularly maintained it. It's just like any other asset that you would have. So I think putting these things into perspective as to how important it is, because there was a lot of that. And let's not really try to sugarcoat it. There was a lot of deferred maintenance and things that were going on, but don't punish everybody for the actions of a few, right? And I think that's where it really comes down to. And I think that's where, with the media coverage and all of that, it's really kind of telling the story of these few condos didn't do what they were supposed to do, and this is the outcome of it. So now every condo did that.
And from a philosophical perspective, I will tell you there's one senator in particular I can think of who has really pushed on that. Like you mentioned your sister and how she purchased a condo for $80,000 in Aventura. Let's pretend that she still lives there. What's her equity in that?
Oh.
Okay. Wow. So, and that is where some of the senators have come from with this at the state level, is saying that you're sitting on a pile of equity.
Yeah.
So we as the state, should we be the one that comes in to kind of bail you out of this jam that you got yourself into? The state has taken a position of no, but the county has a different perspective in Miami-Dade. And they're saying that, okay, these are for structural repairs because we want to keep our affordable inventory, our workforce inventory that we have. And so we as the county want to make investments into those. And there's always been a pot of money that you can help for down payment assistance, but you could also help for single family home rehab. It had never been used for condominiums before. After the building collapsed, that's when we went to talk to them about maybe we could repurpose this for condominium buildings. And Miami-Dade County had a phenomenal part. I say had because they paused it temporarily to automate it, but it is still there. It's not going away. And so August 5th of this year, they paused it. They're bringing it back in the spring. Now it'll be automated. They've done over 1,200 loans at 0% interest, and you can pay it back over a 40-year period. Those are specifically for structural special assessments. So all those condos that needed those components, they did a special assessment. On average, it's about $28,000. You can borrow up to $50,000 again and pay it back. Now, what is good about that is that now for the first time, we're seeing others who want to come into the market to do that type of loan to condo associations. Whereas before you go to a bank, they want you to pay it back in 5 years or 10 years. That's not really realistic for the unit owners, for the condo association themselves. So now we're starting to see private hedge funds come in, and they're looking at doing a 25-year. It's not quite, it's not 40, but at least we're getting somewhere where we can work with.
It's like I always say, progress, not perfection, right? We have to start somewhere. If we keep trying to make it perfect all the time, we never actually get started with anything.
And that has been the approach that the state has taken.
And I think that from where we started to where we're at, it's come a really long way.
It has, in a short period of time.
Right.
But there's one thing that kind of keeps tugging at me that I really want you to address. And it seems like we have a lot of buy-in from Miami-Dade County and from Hollandale. But how do they make sure that everybody's doing what they're doing?
There is a fine. There's a fine if you don't comply. And I know that's kind of been a struggle because you're trying to get these condo associations to comply. And maybe they're having a financial hardship is the reason why they're not complying, but then you're going to fine them. So philosophically, there's an issue with that. But what I found very interesting, and I was sharing the story with you earlier, an attorney friend and her husband, who's the president of the association, got the letter from Miami-Dade County. I don't need to do this, and kind of thumbed their nose at it. And then when they got the fine, it was like, I'm the president, I'm an attorney, and I didn't comply. There was a different way of looking at it. So now that condo association is in compliance because it was like a social thing where they wanted to make sure that they were, and it goes back to transparency and accountability. From that perspective, it's an accountability. If you ask Miami-Dade County, their compliance rate, it's very high, and I don't remember the exact number, but it's over 80%. They have very high compliance on that, and it gives you good raw data to work with to kind of see where we are. The thing I've heard the mayor say over and over, and she's very proud of this, she goes, I know more about condos in my county than DBPR does.
Listen,
that's a factual statement.
Yes. But when you look at it from that standpoint, shouldn't she? Like, isn't that like...
Okay, but do you know why?
Why?
Because of the condo HOA database. And by the way, and I should clarify, in Miami-Dade County, it's not just condos. It's also homeowner associations and co-ops. It's a community association. So even homeowners can go in and get those governing documents or financial information if they live in a Chapter 720 as opposed to Chapter 718, a homeowner association as opposed to condo association. So from that perspective, she wouldn't have made that statement if they didn't have the database to fall back on, to know how many condos are even in your county. Broward can't brag about that.
Bet they wish they could, though. So let's get it going in Broward.
So how do we bridge that gap, right? Because like she said, she knows more about the condos in her county and in her city than DBPR does, and they're the governing body.
Yes.
Correct.
Yes.
So how do we bridge that gap?
Well, I think this is a great first step. If we can convince the Broward County commissioners that this is a priority and you should know what's happening in your backyard, that's a great first step to doing it.
Can our members take an active role in that? Attending county commission meetings?
Yes.
Writing to the commissioners of the area, letting them know we want something just like this in Broward.
Right now we're in the preliminary steps of setting up those meetings.
Okay.
Somebody has to file the ordinance, but once the ordinance is filed, then absolutely we'll be doing advocacy on that.
Nice.
And what's the benefit looking like, right? Because we talked about a little bit in the success that Miami-Dade County has had, but we didn't really talk about the benefits that they had with passing that ordinance, right? We talked about some of the wins they had with the transparency and being able to say we can find these documents, but what's standardizing it to having it one place? What's the benefit of it other than with the realtor? How does that affect the consumer? How does that affect the state?
I was going to ask, it depends on who you talk to as to how it's a benefit. From the elected official perspective, they have now the raw data there to help them to be able to figure out where to direct resources to, and knowing how many condos are even in your district. We have, our county commission is divided like Broward is. Broward, you have 9 commission districts, and Miami-Dade, we have 13 commission districts. So dividing it up like that. That is a tangible benefit. The consumer, though, and I know we've harped on it here, but at what point in the transaction should you know this? Having that information up front. And so if you know that something is coming down the pipeline and you're looking at Unit A and Unit B has a special assessment that is getting ready to come down, you know that you need to build that in or negotiate it with the seller, and Unit A doesn't, maybe that's something that would determine where you want to make your offer. And it really is at what point in the transaction should you have that information? And should you have to pay for it? So do you have to go and pay Unit A and Unit B to get the information? And then you're submitting 2 offers at the same time. I mean, that's not the kind of real estate world that we want to be in.
Right. I think that it builds a lot more trust in the marketplace.
It does.
Yeah. When you have that level of transparency, I think that's overlooked a lot. And I think that Miami-Dade has built that trust in the marketplace, and now Broward's starting to take those steps to build that trust as well. And
time.
Yeah.
Time is money. And so, like you said in your story, they submitted and then she had to wait 10 days to get the documents back, and then, didn't have the information. Now you've wasted everybody's time.
Well, and then the buyer in that story lost $1,300.
Oh, wow.
Because they paid for everything because they were on top of what they were supposed to be doing, and they ended up losing $1,300. Wow. Now we were able to get some of that money back because we had emails and all that stuff, but that's not the point. The point is that they laid out that money.
And that's the story for why we started working on this initially. Was we had buyers rep come and tell us the stories of they've been to 3 different condos, they've paid 3 different condo questionnaires. Their buyer is now $1,000 out of pocket, and still they haven't been able to find a condo that has the reserves that they need to be able to get this 95% LTV or 97% LTV that they need. It's difficult. That's what Wesley speaks to, like how to navigate through IMAP to figure it out. But still, wouldn't it be great if they just told you up front and you didn't have to do all this back end craziness?
Right. And I think you touched on it a little bit when you were saying how the municipalities and the counties learn to allocate funds and having that raw data to actually see where things need to go. And I think that's why Miami-Dade has had a lot of success with now these new incentive programs to coming in for the condo hardening, right? Of what they're doing that's never been done before, because now they have the data to see where these funds really do need to be allocated. And I think without having that raw data, it puts you as a county, a city, at a disadvantage. And even us as professionals working within Broward County puts us at a disadvantage, because we can't give you a list of these are the properties that are financeable right now. These are what's going to come on, because they're working towards that goal. So,
and I also want to mention that a year ago, Fannie and Freddie, like you could go in for FHA and you can see which buildings are FHA approved. It's not how it works on Fannie or Freddie's side, but you as the individual condo, as a board member or the management company, can log into this website they've created that you can then find out. It doesn't say yes, you're approved, but it says if you're not approved, it'll tell you the reasons why. Let's say your insurance is inadequate, or you didn't have enough reserves, and that's because somebody has applied and figured this out. So it's kind of, we've all heard about the Fannie Mae blacklist. It's kind of you can't look at it for everybody, but you can look at it for that individual unit that you happen to be a board member of. And that's on our condo resource page, the links for that. So Fannie and Freddie. And also we started something, kudos to our residential board for having the idea. So after you put a listing into the into the MLS, you'll receive an email within 2 hours, and it tells you exactly the seller docs that have to be turned over to the buyer, that checklist that we talked about earlier. These are the ones legally required. It then tells you how you can look up to see if it's a VA loan or FHA or Fannie or Freddie. All of those links are there. So as the seller's rep, you can go in and look up that information.
So I'm going to switch gears a little bit, because we were talking about the FHA financing, all that stuff. I've been hearing a lot of things swirling around, and we had a great event here a couple weeks ago. And you know where I'm going with this.
I do.
And it was brought to my attention earlier this year that Florida has some stipulations that no other state has.
Yes.
Can you expand on that for me when it comes to lending?
This will blow your mind. I call it the geotargeting, but and we have referenced it. We just haven't referenced it directly.
Yeah.
So as the buyer, again, I'm going to be the buyer, and I am looking for that condo. If I were the same buyer and I'm in, I'll use states that are close to us, Georgia or Alabama, same condo, same buyer, happens to be located on the other side of the state line, right? And let's say that condo is not putting reserves into the reserve account like they need to. I will be able to get 90% LTV, 90% loan to value, and only have to come up with 10%. In Florida, it's only 75% LTV. And so why is Florida the only state that's targeted under this geo-targeting policy that is outlined in Fannie and Freddie's guidelines? Why is Florida the only state that falls under this? And so initially they told us, well, it's because of the way that you have in law, you're able to waive those reserves. So we conducted the research, because that's what we do here at the association, and we found that Massachusetts had a very similar provision to waive reserves as Florida did at that time. And so we took that back to them, and they said, well, it's because you have a high number of foreclosures. And so we did the research, and we came back and said Nevada is in first and second place at that time. Either it was Florida or it was Nevada. And so they don't have this provision. Why is it Florida only? And the third time they came back and said, it's proprietary information. We get to determine. So it's what we call moving the goalposts, and they won't give us a real answer. And so we have gotten our congressional members involved. And the latest congressional member to take up this issue is Byron Donalds, who represents the Naples area, and he was here in South Florida, and he's written a letter to Director Pulte asking him to look at it, and then came to visit with us and get more information. So that is our housing affordability forum that we had, and it was such a hot topic there.
Because I think all these things together, individually, it moves the needle a little bit. Mm-hmm. When you put it all together, it moves the needle a lot, and it unlocks a lot of housing that is affordable. And I think it really adds back in the inventory that we here in South Florida so desperately need because the demand is so high. And as we see, supply and demand is funny because there's so much demand for housing in South Florida, it drives up home prices. But when we unlock that inventory to have all this supply, we could actually see a reduction in some of that pricing, which makes overall the marketplace more affordable.
Well, and there's a trick with that. So if you look at the stats and they're going to say, well, now it's a buyer's market on the condo side, still a seller's market on the single family home. But, there's condo inventory out there. The key is it financeable? And not just financeable from that standpoint. Do I have 25% to go put down? Maybe I have the 10%. And again, if we were in Alabama or Georgia, that would be great. Or Texas, or you pick a state. It doesn't matter because 49 of them have those provisions. But here in Florida, you really have to either get super creative on the financing side or, save up. That's a huge challenge.
Think about it, though. If you're talking about a $200,000 condo and you need to put 25% down, you're talking about $50,000.
Yes.
That's a lot of money. And that's $50,000 as your down payment, not closing costs, not anything else.
Yes.
My heart just dropped a little bit.
Right? So you're looking at it when you need to go to closing, what, $60,000, $75,000 to go to closing to buy a $200,000 property?
So take that same property, and if the association kept up with what they were supposed to on the maintenance, and they were putting those reserves aside, and they were doing everything that they were supposed to, that same buyer then only has to come up with 3% as a first-time home buyer or 5% as a second-time buyer.
Which is $6,000, probably another, let's call it 10. So you're looking at $75,000 to $13,000 or $16,000.
Yeah, big difference.
That's a huge difference.
That's why it's so important to keep up with all this information and for the associations to know where they stand.
And if you're a first-time home buyer and you're getting out of, let's say, a rental that you're paying X amount for every month, you still have to pay that plus save the money plus live and eat and pay light and insurance and you have to have a car because you have to go to work and it's more important for us to really understand that having these tools at our disposal helps everything overall. So like you said, Jalina, it's very important that not just our realtor members, not just realtors overall, but also the general public understands that this is there to benefit them. What you've been what you guys have been able to do in Miami-Dade County and in Hollandale with our elected officials is so much more important than we see just on the surface, because it opens up so much more in housing for so many other people, because it gives you the inventory that you so desperately need right now.
Yeah. And you guys just shed a light on this entire process, because you gave the value of the CSRS and how it generally helps the first-time home buyers at FHA. Yes, we mentioned the lending and the financing for the 25%, but when you hear those properties that are maintaining their CSRS, and if we have the ability to access it for free, it makes it that much easier to get into that ownership. So really helped put everything in place, because when we start this conversation, honestly, I'm sure I'm like some of our general public, where it was, what's going on in the condo market? What's happening? I hear it on the news. I hear what's going on. Getting bits and pieces here and there. But when you lay it out like this, it truly helps clarify that there is light at the end of the tunnel. And Miami Realtors is there to help you. Yeah. I have to plug it. I'm sorry. I have to. We have so many great resources, like from the comparison of condominium registries, the database that's there, the condo forms, everything that's on that site is truly, truly helpful. So I have to give credit to Miami Realtors for that.
So Danielle, where do you think this is going? What do you think, and what would you tell a buyer if they're choosing to go into getting a condo right
now? I think one of the changes that we had this session. And I don't know if you want to go through all the key provisions of it, but probably the most important one that we've heard is, we talked about it early on, is the 3 days, and then it was moved to 7 days. The original proposal was 15 days. And because if it's a new condo that you're purchasing from a developer, it is 15 days.
Okay.
So if it's a resale condo, it was at 3, and with all these changes, they wanted to give them more time. The original proposal was to take it to 15, and they kind of settled somewhere in the middle. So it's 7 business days now that they have to do the rescission on this. So where do I think it's going? I think that everything will level out. If you went to Rock the Market and you saw Craig Stanicki's presentation, there's huge demand in South Florida. If you compare, the Miami Metro, all 3 counties, we'll call it, to other parts, Hong Kong, and you look at these global cities, we're in there, but we're like in 8th place in there. But there's, the density is going to increase. We're going to see more of that. We're going to see more people moving in because that's where the demand is. And if we don't fix our condos, we're not going to be able to meet that and become a global competitor as we have been all these years. And so the market will find a way to fix itself. It really will. We just want to make sure that we have supply for our workforce to go along with that.
And, being in real estate in 2005, 2006, 2007, 2008, I remember when those condos conversions started to happen, and that really propped up our market.
It did.
And it helped us from really taking a huge brunt all at once. Right now, the way that it's set up, it's not advantageous for people to do those conversions right now, because now you're going to fall into all these different lending rules that you're going to have. So I see it in so many different ways that transparency on this issue is so much more important than people realize right now. I don't know how else to put it than that.
Huge proponent of transparency.
So how do we summarize this? How do we summarize what people can do as realtors, as buyers, to ensure that we have a fighting chance to get this passed, not just in Broward, but throughout the state where it needs to be? So
we are always listening to our members. And I will tell you that if you want to send an email, my email is Danielle, DANIELLE, at miamire.com. And tell us your story. Tell us your story about condos, because we can't advocate if we don't know what the problem is, right? And so we continue to collect these stories, and then we advocate with our lawmakers, both in Tallahassee and at the local level. That's how we affect change. And so we need to hear what's happening out in the market. How is this going? I think some of the changes they've already made this session are very positive. The line of credits, the loans that they've done, but there's still more work to do. I mentioned some of the stuff that we'll be advocating for from a clarity perspective, hopefully. This
5.0.
Under Condo 5.0. Yeah. But there's a lot of work. I mean, look, Broward County, we've talked about it. We need to go in and work with those elected officials to kind of educate. Advocacy is what we do. Your association is always here for you, and that's what we're going to continue to do.
Yes. And I got to see that firsthand. I attended the Florida Realtors Conference with you all recently, and seeing those conversations that were had on our end locally, then brought to the table at FR, to see it then presented on stage as what has already been completed. It truly shows the process of how, when we hear you, we do what we can to make it to the legislative floor to have as a new policy, a new law for real estate industry. So hear what she says, and definitely write those emails so we can get more.
Thank you.
Towards Condo 5.0.
And condos too, sometimes there are rules already there, like what we were joking about the POW form. I mean, those laws, you've always had 10 business days for an association to turn those documents over once it's put in writing and requested. It's just people weren't following it. So that's not something that we need to advocate with the elected officials. That's something we need to educate with our current members and tell them, hey, this law exists and you guys should know about it. And so we take it both ways. We go up to the state and advocate, and we also advocate with our own members to educate them as well.
Well, I think that's why like the summit that we did, and then after the summit, you guys did something else with making sure that everybody learned how to make all these changes and do all of that stuff. I mean, the education is there, but let's be honest, there is some onus on us as professionals to educate ourselves too, right? You can provide us the tools, but if we're not using it, then I mean,
and we're trying to make it easier for you too. I mean, we're sending out the emails. We've created forums this year. This has been the year of condos for sure. We have done a lot there.
My favorite saying: I can dig a ditch with a spoon, but a shovel works way better.
Yes,
right?
For sure.
And that's what it comes down to. I think that's what it is. So when we get this ordinance passed in Broward County, we're gonna have you come back on and explain the journey that's been taking, because I know it's been a journey. It's definitely been a journey. And
speaking of journeys, I want to plug real quick because it was 2010 that our commercial board members came and talked to us. At that time, there was what we call on the triple net lease. So they call it like a double taxation because you're pushing those property taxes through. And then because it's part of the rent, you have to pay sales tax on the rent. So you're paying sales tax on the property taxes. That was the conversation that we were having in 2010. And then our leaders were like, why are we even paying this sales tax? Because we're losing businesses to, at that time, it was North Carolina. And then we used it as an example. We took it to Florida Realtors. Like you mentioned, we started advocating on that. Hey, guys, this is happening. They commissioned a study in 2012 and found that Florida, once again, was the only state that was charging a sales tax on commercial leases. And so we started advocating, and starting October 1st of this year, it's now going to drop down to 0. It's currently at 3% if you add in the local discretionary 1%. But it's at 3% now. October 1st, it'll drop down to 0. 15 years. Yes. 15 years.
Let's hope it's not 15 years. Let's hope it's a lot sooner than that one.
That was over $1 billion that we were asking to appeal.
And let's be honest, right? We've made a ton of progress this year with getting this moving forward in Broward County. I think that we're to the point right now where we're going to be we're still very preliminary, but we're going to be setting meetings. We're going to be having those conversations, and I think that that's where it all starts, is having the conversations and showing how important this really is. And I think we're going to have to show them this podcast when we're done too.
Yes, share it, spread it all. Is there anything else you want to cover with condos? I know we could talk for days about this.
We could. Yeah. Thank you for having me.
I thank you for being here. Yeah. I know that you have a huge undertaking that you're going through right now, and your schedule is very packed. So being able to sit here with you for this much time is really very appreciative.
Yes, for sure. Before we leave, do you want to share any last resources where they can find sites, webinars, anything of that nature?
Yeah, I think if you're listing condos, stay tuned for the email that's coming out, because that's packed with great information on there. And if you just want to know in general, go to our website, MiamiRealtors.com/condos. We put a lot of resources there. We walk through and explain what the milestone, the SIRS, all of that information is there. So you, at your leisure, you can read on these amazing topics.
And I'm going to tell you, honestly, from a realtor perspective, there are a lot of good tools that you're going to end up using in your folders for your contracts, because there are a lot of good tools in there that are very helpful. At least for me, I found that they were.
And even like, how do you formulate a budget for the condo association? There's a quick video on YouTube. So really just familiarizing yourself with the terms in the condo world will help a lot.
Nice. Well, thank you, Danielle, for joining us. Once again, thank you, Larry Singh, you're president of Broward-MIAMI for 2025.
And thank you, Jalina.
Oh, it's always great. I'm like a little fly on the wall. The conversations are just so impactful. So I really hope that those watching have a chance to play it again, listen to it over and over, and really dive into the inside look of Broward real estate. Thanks for joining us, everyone.
Thank you so much for tuning into the Miami Association of Realtors official podcast channel. Make sure to hit that subscribe button, and please rate and review us. Until the next time.